Well, it happened. Meta stock is up over 20% after hours. And if you've been following the channel for quite some time, you know that it is the largest holding in my portfolio by far. And we've been buying it for a while now, and we went really heavy in November. And if you haven't seen the video, go check this video out right here, posted on November 1st, 2022. I share with you at least 30 minutes of my thoughts on this company and why I thought it was the time. That was the line in the sand, where we built it from the small position that it was to its massive behemoth size that it is today. And after today, if the pricing holds tomorrow morning, we will be up over 80% on this company in just 3 months. That's actually pretty good. Now, but we're going to be talking about what happened in this earnings report. And first, I'm going to lay the groundwork. Let's hear it from one of the best minds in investing from this old video. And I highly recommend you guys go check out this video on your own for the rest of the content. But here is this one clip that you guys might remember. So here we go.
Who took a project that was his, Argo, and closed it because it was not ready. It was not near enough. This situation is almost a rogue situation. I had thought there would be an understanding that you just can't spend and spend right through your free cash flow. That there had to be some level of discipline, and I didn't get it. But David, what did I get wrong? I trusted them, not myself. For that, I regret. Okay.
All right, so he cried. You guys probably remember that. But point being, kind of a clown show at this point because he was extremely bullish when it was at 300, and then all of a sudden it's right before him, below $100, and he doesn't see it. Also, keep in mind, we had YouTubers that don't even cover stocks whatsoever. They have no background in this whatsoever, and they were making comments about this, saying how the company's dead, the company's bankrupt, the company's terrible. They're just doing terrible things. We had kind of the, I guess, guru slayer guys that were also doing this. Same thing. They were commenting on this. We had a guy, Stephen Van Meter, makes doom and gloom videos all the time, all of a sudden saying Meta's a dead company, right? All these things happened. And people are forgetting because those guys will continue to get tons of views because obviously the value that they provide is so fantastic and great that the viewers get the value. But there was another secret creator that I will not reveal their name. The community knows it's kind of an inside joke that basically times the bottom of every great company. And when they get bearish, it's like time for you to load up like crazy. But I don't want to sway that person's opinion because they're literally my golden goose that keeps laying golden eggs, and I want them to continue what they're doing. And I love you if you're listening and you somehow know that it is you. Forget that I said it. It's not you. Keep doing what you're doing. Keep it up. Anyways, so going over the earnings presentation today is something we're going to be doing to talk about it, spark the conversation. And I want to begin with some of the bearish points that were levied against Meta back in the day. I say back in the day like it's years ago. It was just 3 months ago. Remember Netflix, right? Netflix was hated so much that people said it was dying company, terrible product, terrible brands, terrible shows, etc., blah, 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 blah. And it was below $200. It was sitting right there before everyone. Of course, Netflix and streaming companies are very difficult to value. That's very true. And I get it. Okay, I get it. But it's so funny how the narrative just changes. How now Netflix is, oh, they're the king of content. They're all this, they're all that. And back then, I presented you guys in such a way, in a video format, all the things about Netflix, why their content was actually really good. The data wasn't agreeing with that sentiment. The sentiment was there, but the data wasn't agreeing with it. And that's what's important. And really, truly using the quote properly, be greedy when others are fearful and be fearful when others are greedy. When you take that statement truthfully, not how these bimbos use it, and you have the guys buying Tattooed Chef, for example, and they say that quote and they keep buying into it when it's factually a bad company, but truly, because easier said than done, when it's a truly good company and you're seeing that the market doesn't see it, is truly discounting that business, then that's your opportunity. And my goodness, was that an opportunity? Because let's take a look at some of the arguments. And again, I go over that in this video in November of 2022. Well, that capex spending. Well, they're building out their own basically, you could say cloud systems, right? Something that TikTok can't do. So you take a look at TikTok. You think they can do that? You think they can build that infrastructure? No, they can't. You look at Snapchat. Do you think they can do that? No, they can't. They have to use the hyperscalers. They have to pay the toll road on the internet. Well, not Netflix, I apologize. Meta, right? They can. And that's what they're doing. And that's what the spending is. Of course it's expensive. Of course they have to do it. You want them to do that. They have the scale and the capability. They can save a lot more money over the long term. We have some people in the Discord community that work in that space, and they agreed. I had conversations with them throughout this whole time period, and they were like, yeah, it's something they have to do. It's something that will benefit the company going forward into the future. But of course, retail, everyone and their mom had an opinion on Meta, how it was a trash company, but whatever. So really talking about TikTok for a second, look at this. Look at this. Now, you might be hearing this. There's the rumors that they're going to get banned and all that. Now, that's something else. That happens. You will see Meta probably rise to values that haven't been seen in a long time. And I will be a happy camper. I'll probably exit the position or take some profits at that point. But really, Instagram Reels has been doing really good against TikTok. It's been doing really good, okay? And if you look at Snapchat, unfortunately, there's another video coming out for just Snapchat because there's something to be said. The one point that I will share with this video and that video is that just because the advertising of one is affected doesn't mean the other one. Really, companies focus on efficiency in downtimes. They don't cut everything all together. I'll explain more maybe in that video. But just to say that during a recession, that doesn't mean that Meta necessarily fails or suffers. And if you look at the Great Recession, the advertising expenditure in the United States only fell by about 10%. Again, I went over that in the previous video that I shared with you here. Okay, so again, lots of value, I believe, but of course I am biased. And the video did all right, actually. But it was definitely, maybe not as viewed as the people who made videos saying that Meta was trash and dying. So give a like to that video if you want to support that video and get it out to more people so that they see, oh, that guy was talking about Meta and they didn't know what they're talking about. Or you would see some of these creators were very bullish on Meta, and then as it went down, they became bearish or questioned it entirely, and they didn't execute right. Okay, so going over the earnings presentation, let's take it up to the top and really kind of discuss, well, what's going on here? We see revenue coming down. Oh, scary stuff here. Revenue coming down. Dying company. It's a dead company, trash company. Again, like the sarcastic title here, Meta is uninvestable, broken trash. Look at that right there. Uninvestable, broken trash. Absolutely. I love doing stuff like that. Yes, it's clickbait. Again, November 1st, 2022. So we see, sales coming down. But we saw the same thing back in that video. We saw the exact same thing. Q3 2021, Q3 2022, sales declining. Whoa, what happened? Tough comps, guys. So if you actually take a look at 2020 through 2021 was an extraordinary year. When you normalize that, okay, now it puts the picture into greater focus. This is my problem a lot with some investors is they're very narrow-minded. They don't look at the bigger picture. They're looking at 2021, 2022, and they're like, it's down, therefore bad. That's bad. Number down. No context, complete lack of context there. And that, of course, that's why you can't just use a calculator to win. But point being, if you see and you take into consideration where they were and where they're going, it starts to paint the color in the painting a lot more, right? So if you also come down here to expenses as a percentage of revenue, you do see that, oh, R&D is going up. Now, R&D, that's a bad thing. No, it's not a bad thing. They're a tech company. They have to innovate. A lot of that expense is purposeful, right? There are a lot of technologies that Meta is developing. I've gone over some of them here and there on live streams, etc. But some of them are very fascinating and have use cases outside of what you would think the metaverse, which let's talk about the metaverse too, because that is another point of bearishness a lot of people levied against Meta, saying, oh, Ready Player One, that's a stupid idea. Well, it kind of is a stupid idea, but that's not the great use cases potential that Meta has. There's a B2B system here. There's an ecosystem that is being built there. And that is where all the money is going to be made, not in the B2C. Who cares about that? The B2C is still dominated by the iPhone, and that will take a long time to develop. That's for sure. But the B2B aspects, that's a different story. And I feel like going forward in the future, we're going to see more of that for sure. And that color will again be, filled in for us in the painting, and the painting will become more clear to everyone. But that will take time. And do I think there's going to be a B2C component? Absolutely, of course. Video games are going to be, of course, more enjoyable in the future in the virtual reality world than they are today. But that's not the reason to be excited, in my opinion. It can be a reason for you. Now, look at this. Oh, net income down. Oh, or diluted earnings per share down. Well, of course, they're spending a lot more on R&D. Those expenditures, those gap expenditures aren't just, expenses that are just going away. They're investments. Really, you can think about it as the business is making investments into the future that will pay dividends. What you really want to pay attention to is, of course, their take rate. Well, also, you see the capital expenditure is also going up. I wanted to cover this first. And, scary, 2021, 2022, and 2023, of course. And another thing they talked about was lowering that capex guide, that capex spend guide. And that's what the market was like, oh, that's amazing. Well, they're not going to spend the same amount of capex every single year. Eventually, by the way, this is going to not be at the same level or the same scale as a percentage of revenue. There is a point where they achieve efficiency. It's very similar to what I've been talking about with Amazon, which deserves its own video, and I'm trying to film that before the earnings tomorrow. And community members already know what I've done with Amazon, so that video is going to be interesting. But Amazon's one that I've been kind of pounding the table at, kind of trying to explain and make my case why Amazon's a fantastic business. And if you haven't checked out some of the videos, I will be, of course, talking a lot more about it. But we'll get to there. We'll get to there. When I mean videos, I mean live streams. So we also have the family daily active people. Wrap your head around this. 3 billion people use them on a daily basis, one of their apps. Now, you have Instagram, right? Very exciting. You have Facebook, the cash cow. You also have Facebook Messenger, which a lot of people use apparently. But what I'm really excited for is WhatsApp. WhatsApp is so underappreciated by the West, it's not even funny. The usage of WhatsApp globally is absolutely incredible. And the ways that they can monetize WhatsApp, and they are monetizing WhatsApp, are genius. Okay, so that's nothing short of genius. So they're moving in the right direction there, and I'm paying attention to that. Also, the use of I know buzzword AI, right? Through metaverse, or not the metaverse, sorry, through Meta's platforms, is showing increasing signs of promise. And again, their chief of AI looked at ChatGPT and was like, yeah, it's not really impressive. By the way, I've been talking about that with, of course, DeepMind from Google. Same thing. I'm not really too worried about ChatGPT. And I've actually used products or tested out products from a friend of mine who works at a startup, and it's pretty good, I think, if not better than ChatGPT. So it's not really all that impressive, in my personal opinion, but it's the one with the best marketing. So that's there. Also, Amazon definitely has something better. You best believe that. But yeah, all the big tech, they have really good chat AI. So that's coming. It's going to be pretty commoditized, I think, pretty quickly. But it's going to be who has the better infrastructure. And if you see what ChatGPT made in agreement with Microsoft was for usage of the cloud, that's very interesting, right? So it's a new form of currency. I wanted to talk about that in its own video because that deserves its own video. But if we actually look at the revenue per user, we do see our revenue per person, $8. It's down. Oh my gosh. Well, again, tough comps. Compare that to Q4 2020, which is, again, is a bit more comparable. And that's kind of maybe more into question where you have something there, little investigation to be done. But if you do see overall, it was a pretty good quarter from what we were expecting, really. And I'm kind of happy. What I also wanted to talk about is engagement. Engagement with their ads has gone up. I was looking to see if they had a chart in there. They didn't have a chart. So engagements with their advertisements has gone up a lot, which is incredible. That's exactly what we're looking for in this business. Of course, we're a business that predominantly makes its money from advertisement. And yeah, that's good news. So on top of all this, they announced a $40 billion buyback. Now, I'm kind of, on their buyback track record. They bought back shares. Sure, they bought back around here, man. Okay, it looks like it's a lot cheaper, right? They've been buying back shares in this range, and I would have preferred them to hold the cash in that range, but hindsight is 2020. And it is a generous buyback, as showing from Google. That's about 10% of the current Google shown market cap with the $40 billion buyback. That doesn't mean they're going to spend it all at once. That means that's what they're going to do, or what they've allotted for in buybacks into the future. So keep that in mind with Meta. But I mean, market was like, whoa, that's very generous. Thank you very much. Okay, and I think yes, that is quite generous. But name me how many companies out there can do that. How many companies can spend all that they need to spend on the capex, all they need on the R&D, and continue to provide capital back to shareholders in the form of buybacks? How many? Very few. There are a lot of companies that can do that. You think Apple, think Amazon, well, somewhat. You think Microsoft, you think Alphabet, right? You think those companies. And there's other companies too that are smaller than that are still fantastic. There's not many that can do that. And so this was, I believe, at the time, a fantastic company at a fantastic price. Usually we're looking for, fantastic companies at good prices, fair prices, etc. And this is why you could say, or you saw the journey, why I was accumulating Meta at prices that were higher than what ended up being my average cost, because I started accumulating, nibbles, gulps here. And then when I saw the opportunity, what I believed was the market just went crazy, I pounced on it. And that's what it is. In hindsight, it was a good move. And remember, I was very hesitant at the time. If you guys recall the video titled My Last Portfolio Update. Well, why did I say it? Because I was becoming cautious. I was worried that people would follow. And of course, then I decided, you know what? I'm going to trust the responsibility of my audience. And I put it to a vote. And I said, okay, do you guys want me to continue doing portfolio updates under the understanding that you should not be copying? It should be your own ideas entirely. And I'm just doing this kind of showing and documenting my thoughts over time. And then we agreed to it. And then you guys saw basically what the changes were. And then it worked out. But that wasn't the point. I was almost worried, okay, it doesn't work out. And all these people just, go nuts. But I think my audience, I misjudged you too quickly. And there's a lot of, I think Capital Mindset has attracted a lot of really good thinkers. I see that all the time in the Discord community. I mean, I'm always impressed by people with different backgrounds and expertise in different things. And I'm always learning from you guys too, the community in there, because it's also really good to have a group of people that are, eyes and ears in different things. So very happy. I think the Capital Mindset community is extremely happy. I know that a good number were big investors in Meta and also saw the craziness and pounced on that opportunity. So congratulations to all you guys. If you guys are one of those, make sure you leave a thumbs up. Okay, you guys have to leave a thumbs up. But if you enjoyed this video, feel free to leave a thumbs up too if you liked the video. If you're not subscribed, go ahead and subscribe to the channel, and you can see more content like this when I do updates and share my thoughts, and attend the live streams. The live streams are a perfect opportunity. If you want to ask questions live, I answer almost every single question that I can. And while they are still, let's say, small in attendance, sub 100 or low hundreds, I can still make sure I can get through all those questions. So make sure if you guys want to ask a question, attend those live streams. So with that being said, thank you guys so much for watching, and I will see you guys on the next one. Bye.